let's say the only way like a person is gonna can move forward is to put down under 20%. Would you just recommend that they just hold off on buying a home, or do you think that they should go ahead and move forward?
I think that they should go ahead and move forward. The reason being is so I always tell people it's like you're never going to get away from paying mortgage. You're either going to pay someone else's or you're going to pay your own. Like, so, like even if you're in an apartment, the person that owns the apartment 9 times out of 10 they have a mortgage, on that entire apartment complex, and so you're renting an apartment where you're contributing to that mortgage cost every month. Um, I'm all in favor of paying your own mortgage, just because, like, let's say in a year, 2 years, 3 years, 5 years, when you get ready to move, you're going to be able to recuperate some of the money that you paid, in every month, for that particular property. So, for instance, if you can qualify for a home at 3% down or 3.5% down, it's much better to go ahead and purchase the home or the condo, rather than renting, pretty much. Just because you're going to be able to get that appreciation. Now, where it comes in a huge benefit, let's say for instance, like right now in this market is we would consider it to be a buyer's market, even though when you look at the reports, it's going to say that it's balanced. We would consider it to be a buyer's market just because the homes are typically going under the listing price.
Hmm.
Uh, so if an but the interest rates are considered to be high right now at this point. So if you could purchase a home right now, now would be the time to do it, because when interest rates are high, like I said, you get a deal on the property, even if it's 3% down. Well, let's say the interest rates are pretty much expected to continue to drop down, but it's going to be a slow drop during 2025, and we're expecting to have a property value increase once we get closer to 2026. So if you put 3% down, and then we see numbers like COVID again in 2026, well, that property has appreciated so much. You can call next year and ask for a rate and time refinance, and or for the bank to send an appraiser out to get your property reappraised, and you may already be at that 20% mark to drop that PMI. So you don't have to wait that 7 to 13 years in order for that PMI to fall off. You can actually trigger it right away.